Well, with the value of this year's grain crop crashing in the markets, the question now becomes, what impact is that going to have in the long term? In this week's Bottom Line, Neil Melancon takes a look at this year's harvest as well as South America's next year's crop.
The Bottom Line is brought to you by the Cotton Board, strengthening the fiber of our industry.
Corn prices below $4 a bushel. Let that sink in for a minute, especially considering where we were this time last year, with the market value being more than twice that. I know harvest isn't in yet, but barring some last-minute weather disaster, it looks like the bears will hold sway. We have entered into a new reality of lower prices for the grains for the foreseeable future. As I told you last time, there are big numbers coming in for corn that will be piled on to an already big carryout. For soybeans, the USDA has since expanded both its acreage and yields, greatly fattening out those carryouts. All this time, the weather has been extremely positive overall for all crops. Crop condition scores like the ones we're seeing lately have only ever been outdone 1 year out of the last 20. Really, what we need to look at is where we're going. I got a chance to catch up with Troy Lust, a grain marketing specialist with FC Stone, at the recent Farm Bureau convention last month. He says the size and quality of this year's crop will almost certainly have an impact on how much grain is grown in South America next year.
Well, that's just it. When you sit here and you talk about the U.S. farmer being below cost of production, it's when you look around the world market at infrastructure, their cost at port to get the goods to the export facility is substantially higher than what we have here in the U.S. About a third of the value of their product at port comes from internal transportation costs. That's the same for the Ukraine region, Soviet Union. So what that means, here in the U.S. it's about a fifth of the value. So what that means when our producer is at or below cost of production, their producers are way under. So we'll probably see some impact on potentially reducing, especially corn acres in South America, if this continues to play out as it looks today.
The bottom line is lower prices for grains are here to stay, and I think it's a good thing. Now, I know it's not good news for grain farmers, but hopefully the quality and size of their yield will help with profitability on farm, especially in Louisiana, where they can get favorable barge bases. For livestock producers looking to rebuild herds, cheap corn is now just a necessity. For us at home, while it won't impact us immediately, look for prices to start coming down over the next 6 months. And Mike, I know we need that relief at the grocery store, but it's that old tale of sticky prices where they're just not quite ready to let go of those higher prices there.
You're right, and lower corn prices, Neil, are indicative of the cyclical nature of agriculture, because cattle producers were really hurting when corn prices were high. I haven't heard a peep out of the cattle producers of late. Neil Melancon, thanks.